Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. 2 weeks ago, I observed that the NASDAQ 100 was breaking out, or at least was trying to break out over its bubble price, that's 7.4 times book. But we had, as of that time, not yet obtained the necessary confirmation from the Standard & Poor's 500, which had been holding steadfast below its super growth price, or 3.5 times book. As of Friday of last week, the S&P had moved finally right up to that key break point and even just a little bit beyond. Since then, the S&P has managed to hold there, and therefore looks to be heading higher. Assuming that it holds, then we will have a confirmed technical breakout by the overall U.S. market, which means that there will likely be a fair way for the markets to run. As we will see momentarily, in the past few days, the FANGs have stuttered a bit, but have held in at their own breakout levels. So far, it's all systems go. I continue to think that this breakout is being triggered by an incipient bubble in the artificial intelligence, that is AI universe, which is powerfully represented amongst the FANGs. An emerging bubble, by its very nature, is caused by an increasing rampant speculation based on hoped for but very uncertain fundamentals. As such, the bubble can be highly profitable but increasingly risky, and will lead, if history is a reliable guide, to boom and bust behavior. Using the tools of our SVA service, we will track the progress of this bubble, how far this market will run, and what ultimately the subsequent bust will look like. I don't know as of yet. But if it's anything like, say, the bust in the dot-com market 23 years ago, I think that it'll be pretty obvious, as it was then. Famous last words or hopeful optimism? We'll see. Just yesterday, I was on BNN Market Call. If you'd like to watch a recording of it, click the link in the description. Now, before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, well, let's start with Amazon, which is looking, to all intents and purposes, almost like a perfect clone of the NASDAQ 100. And like the NASDAQ 100, it has just broken out over its bubble price. It's going to pull back to check to make sure, but a breakout pullback, of course, is exactly what we expect. The same thing goes for NVIDIA, although I think with a great deal more éclat, shall we say. It burst out over its HV6, which had been a 23-year all-time high. It's pulled back a little bit, kind of testing that breakout, but it too is looking potentially higher from here. Alphabet, same story, breakout, check back, here we go. Apple just continues to kind of ride its HB6 price, that's 33 times book value. We just hang right in there. Tesla was a little bit surprising that it had broken out, given in particular when you take a look at its fair market value. And remember, of course, that this isn't an automobile car manufacturing company. However, it too can claim certain AI provenance, and so of course, like all the AI stocks, away it goes. Meta continues its march, I think, probably back up to its bubble price. Um, uh, it has some AI elements, I think, but more to the point, of course, Zuckerberg is focusing heavily on the profitability of the company, and I think it probably heads back to, as I say, its bubble price, which had been its all-time high. Microsoft, interesting, almost a kind of a laggard, one might say, of the AI stocks, in that it is not broken out to above a key breakpoint, and yet it could be almost considered to be the founder of AI through its Chat GPT function. And finally, Netflix. Well, Netflix had come up to its bubble price, and I thought that was it for the stock. Well, not to be today. The stock has busted out on the supposition, I think, that it has found a new way of increasing its profits and profitability. We'll see. We'll have to note, by the way, when we look at its fair market value, that the analysts don't seem to particularly agree, but the market doesn't care about that. It's kind of up and away. Now, in summary, what are we seeing? The NASDAQ 100 is now in an incipient bubble condition. This is a term, that gets bandied about carelessly. But what does that mean specifically? Or does it mean anything? In other words, is a bubble just something that we don't understand? No. In SVA terms, a bubble refers to a specific valuation condition in which a stock, or indeed a whole market, is trading above its bubble price, which is 7.4 times its adjusted book value, and is trading without strong support from a positive fair market value. That number, 7.4, by the way, is 1 over E squared, E being the Napierian growth constant. What I might now call the AI stocks are all breaking out. Led by NVIDIA, we've already seen Alphabet and now Amazon following suit. I am surprised that Microsoft, almost the founder of the AI movement, has not been stronger, but it's got a good head of steam. Meta, if it hasn't already, will claim AI status and continues to go higher on the promise of rebounding profitability. I still expect that its bubble price will come into play, especially if the markets continue their breakout and investors become increasingly optimistic. Now, there are 3 what I might consider to be non-AI FANGs. Apple, which I'm sure will sooner or later try to claim some AI parentage, continues to nicely hold up on its share buyback program. It's not exciting anymore, but with a market cap of almost $3 trillion, everyone owns it, everyone believes in it, and no one dares to sell it. I've read comments that the shares are becoming very expensive, but compared to Amazon, NVIDIA, Netflix, and Microsoft, they are, if not exactly conservative, they're still on the side of being okay. I suspect that Tesla is tailgating the market as its own fundamentals are steadily weakening. Maybe Elon Musk will now claim that its cars are being guided by AI. And I suppose to a real extent they are. But so what? Netflix had met all of my upside expectations, and what I thought I could see ahead was not exactly intriguing. Well, last week I said I would cheerfully sell, for the second time, on its run back up to its bubble price. But I have to eat my words today as the shares have burst out over their bubble price on the expectation that the company has found a new source of growth and profit. You can't see it in the earnings and the fair market value, however. That makes a virtual clean sweep of the FANGs in strong uptrends or over key breakouts. A tidal movement, which I would advise any bears not to get in the way of. Every company worth its salt is, or shortly will be, claiming to employ artificial intelligence somewhere in their business. So hang on, the fun may be just getting underway. By the way, the NASDAQ 100 and the S&P 500 are close enough to their key breakpoints so that if this breakout is all a kind of a high-level con game and just a feint to draw in the greedy and the unwary, as some are suggesting, your downside risks are very modest, as you will be able to bail out with only very minor losses. I've seen this kind of thing before. The last time being in the 1999-2000 breakouts with very high valuations, great stories, but very poor supporting fundamentals. Volatility can be fierce. You may have a lot of fun while things last, but they will end in tears. Again, please be aware that you are not investing in these stocks. You will be gambling, purely and simply. Reminding you of my BNN appearance, by the way, if you want to watch the recording, click on the link in the description. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you